Here we go. It is 1:30. Welcome everyone to Military Money Movement. This will be a really good one. We're going to talk about VA loan assumptions. I've had two questions actually off LinkedIn in the past about 4 days about VA assumptions. So that's really what we're going to focus in on. And what I want people to understand is it's a great resource, but there's some caveats to it. So that's what we're going to talk about. So as we all know, we do about a 10 to 15 minute kind of teach, and then I stick around for questions. So if you have any questions, drop them below. We'll definitely answer them, and we will get started. So VA loan assumption. First, what is it? If you could go buy a house with 3% interest rate, would you? Yeah, there's a lot of really cool things you can do with VA loan assumptions. They're meant for death, divorce, decree. It's a legal means to transfer one loan to another individual. And we just happen to be able to use it in real estate, but I like to preface it. It's meant for death, divorce, decree. We can use it in real estate. There's not a lot of the servicers are the ones who handle this. And so you want to make sure you follow kind of these guidelines so you don't end up, with expectations that you cannot accurately move forward on a transaction with. So the first thing they're saying, this is not a refinance, and this is somewhat of a purchase agreement, but not in the traditional means. And I bring that up because a lot of people, you got to think of highways when you do a purchase, right? So you have a purchase agreement, you have the lender running, you have the realtor running, the realtor's handling contracts, inspections, um, all that. The lender's doing appraisals, title, all that stuff. When you do a loan assumption, no one does anything because the servicer is the one who has to do it. So the servicer of the seller is the one who actually will approve the loan assumption. Now, it's really important to understand this because if you don't understand this one part, then this is where everyone gets stagnated and they don't know what to do. Is like the servicer, like the seller actually will drive this more the seller because it's his loan he's transferring. So, when you talk about finding a title company, when you talk about, those things, the seller's the one doing it, not really the buying side. Now, the buying side, here's something that's kind of crazy, is there's no inspection. There's no notice of value that's issued. So there's a lot of things that don't happen. And so that's the big thing to understand about the VA loan assumption is this is not really like a refinance. It's like a purchase, but it feels a lot different. And sometimes you do it and everyone sits on their hand and they're like, what's happening? Nothing's happening. It's like you're correct. And so, the big reason why this matters is there's a gap of a couple years, 2020, 22, and a little bit before that, where the rates dropped really low. Okay. And so you might have an offer on a low rate. For listing, it's really good to say, hey, the seller has a 3% VA loan rate on it with the assumption. Now, now just remember though, someone has to come up with the difference. So you have the note and then you have the purchase price. Someone's got to come up with that difference. So if the note's at 500 and it's worth 700 now, someone needs to come up with 200 grand. Now, there are some third party companies that I think facilitate the difference there. I've never used them. I researched them one time. The rate was over like 8%. So when you blended the rates together, it was actually above the current market rate. And so just make sure you're accurately adjusting a blended rate together. That's really what you want to make sure. And then the next is who can assume a VA loan? Actually, anyone can assume a VA loan. But if you're the seller and the listing agent, you know, if another veteran assumes another veteran's loan, they kind of swap entitlements, then your seller can go use a VA loan again. That's what I personally did. I've done a VA loan assumption, and that's how we did it. He assumed my VA loan, and I got his entitlement and so forth. I went on to use it as many times as I wanted. Now, if just a common person assumes that the seller, the veteran, will lose that portion of the entitlement forever. And so I just say that with like, if you're a seller, don't just fall into this like assumption thing. You want to make sure you're protecting yourself on that. But really, the baseline of how this thing works is the buyer will apply for a loan, a VA loan through the servicer. Now remember, that servicer might have overlays that are more restrictive than other banking lending institutions. So they might have a requirement of a debt to income ratio or something beyond required for a VA loan. So I always say make sure the buyer is approved for a VA loan before they even start the assumption process. Because what you don't want to do is go down this whole road. The servicer approves it, and then they go through the underwrite. Honestly, so it takes a while. So the servicer approves the the buyer. They get the VA approval, and when they get the VA approval to say they can do it, that's when the underwrite kind of starts with it. There's still an assumption fee. There's still a VA funding fee if the buying person uh, requires, if they're not exempt from a VA funding fee, they still have one. Timeline, 45 to 90 days. Mine took about 60. We have a friend right now doing one. They're over 90 days. These departments are not big. These are meant for death, divorce, decree, basically saying if I'm living in a house and I'm the veteran on a VA loan, I can pass it to my kids without them having to refinance and do a lot of things. That's what it's really meant for. We just can use it in real estate. So, there's kind of pros and cons. The first, on the pro side, you can definitely save a lot on your monthly payment, lower cost. You get to assume at that rate of maybe 3%. And here's the other thing too. You assume the escrow account. Everyone forgets the escrow account. That goes with it. So you need to negotiate that in your purchase contract. If you don't, you could end up unexpectedly, you know, the buyer's going to assume the escrow. You're not going to get that like on a normal sale when when the loan gets paid off, you get the remaining escrow account as a seller. Well, they don't sell, it just transfers. So there's a purchase with a transfer, not a purchase with a home. Like the loan doesn't get closed out. And that's where a lot of people mess this thing up at. They might have a large escrow account that also goes to the buyer. So keep that in mind. And then here are some of the cons on the buying side is, large payment, down payment, potentially to cover the equity. It's going to be process heavy on the paperwork. Servicers are not all the same. And so you kind of need to start there before you even start the process, because that can always happen to you. I've had before where they started an assumption and then the servicer sold the loan to someone else. And then the other servicer didn't have the loan yet and needed a first payment. Like these things can take a while. So I just really emphasize that you want to make sure you're doing your due diligence. Why realtors should care. And I know we're talking more to veterans here, but if you're trying to sell your house, it's a good leverage piece to kind of get some traction coming in the door. And it can help just get attraction. Right now, a little bit of a slower market, so it's a good way to do it. Now, I would say this. If you're a buyer, listen, listen, listen. Knock on wood, listen, listen. You are waiving a lot of your VA rights when you do an assumption. For example, there's no appraisal, there's no notice of value, there's no required inspection. You assume the property as is. If there's a crack in the foundation, you got a crack in the foundation. If you like the appraised value of the house, no one's going to come check that. So if the seller says it's worth 800, make sure the comps support it. Order a third party appraisal. Do some things to protect yourself because there's nothing that says it's worth 800. That's just the price. And you're agreeing to take his note, not the purchase price, where when you do a traditional VA loan, you have to get the new loan establishes a new notice of value, the appraised amount. And that's not going to happen. And so that's what I really like to tell people is like, if you're buying, you really need to understand, what you're waiving. And then that purchase price is an arbitrary number. It's not governed by anything. Now, if you're selling, this is what you need to know. The escrow account, make sure you have the agreement of who gets it. They should be paying you out that escrow account. And then they can reestablish, right? When I did mine, whoops, I did not know that. And he got my whole entire escrow account. It was a shock. He was a very stand-up gentleman, and he called and just cut me a check for the proration difference for the taxes. So very nice of him to do it, but I was like, "Where's the escrow?" And they're like, "Oh no, you don't get it." I was like, "Wow, did not know that." The other thing, if you're a seller, don't be contingent to buy your next house, okay? Because there's no tight timeline. These banks don't care that you're trying to close on your next house by X date, and so just be aware of that because we've seen this time and time again. We've had a loan we did up in Colorado where we actually just did the loan because there wasn't enough of a difference. I think the assumption was around 5%. Anyhow, we just did the loan because it was quicker because the guy needed to move in and the guy needed his money to leave. So they can take 45 to 90 days. Some are quicker, some are longer. Heads up, that's how it works though. And I just really encourage people if you're in this ballpark where you have this availability, this option to do it, definitely explore it. Reach out to myself, shoot me a DM. I'm here. I've done VA loan assumptions personally. I've helped a lot of people walk through them. Like I said, there's some third-party companies that will cover the difference. I don't like that, just because it's a really high loan amount and it's a second on the mortgage, and I don't like how that works. Even though they might look enticing, but when you add your current payment and then you add that next payment, the blended rate is above the current market. And people are like, what? I got a 4% rate. I got a 3% rate. I'm like, yeah, but you're paying more combined than just getting the rate at today's market, right? So to really make sure it works for you. So anyhow, that is a VA loan assumption, and I hope it's really helpful for you guys. I will have this posted in here in the recordings as always. Hope everyone has a fantastic day, and we'll talk to you later. Bye.